In this video, I will be turning $200 into $2,000 in under 2 hours, trading the NASDAQ live. As you can see on the chart, there is a resistance level that I had previously identified during my pre-session analysis. I was able to spot this level by examining the 2-hour chart, due to multiple retests, and the 5-minute chart, because it was a former support level that had turned into resistance. Upon analyzing the cumulative delta, I noticed that there was an absorption of market buy orders at the resistance level by the offers. This could indicate that either there weren't enough buyers to sustain a bullish move since there was an imbalance on the DOM, or that there were hidden offers absorbing the market buy orders, which would push the market lower. The inverted hammer candle was the trigger for me to enter the trade. After the close of this candle, I placed a limit sell order at a maximum of 2 ticks away from the pivot. In addition, the price reached a new high while the cumulative delta did not follow suit, which increases the likelihood of a downward movement. With all the criteria present and some more, it's a no-brainer. As the price starts moving up and down, as expected, many traders begin questioning their trade bias. They may wonder if this is a potential reversal. However, it's important to remember that every outcome in trading is uncertain, and there is no guarantee of what will happen. What we do know is that by strictly adhering to your trading plan, you increase the odds of success over the long run. It's crucial to always stick to your trading plan no matter what. In essence, trading is a waiting game. You need to exercise patience both while in the trade and while waiting for the setup to align with your criteria. For those unfamiliar with the term, trade criteria refers to the checklist of requirements needed to initiate a trade. Oh my God, I am so excited. No, but really, during the first few days as a beginner trader, you tend to get super excited whenever the price moves in your favor, and even after years of trading, you still do to a certain extent. You need to be aware of these emotions and manage them accordingly because they can truly be the trigger that leads to your potential downfall, such as revenge trading if the price goes against you and you get stopped out. I mean, ultimately, you just have to allow price to do its thing rather than succumb to the randomness in the market. The only way to beat the randomness is by sticking to your system. Obviously, it should be one you have used on a simulation account and one that renders a yearly profit. Cumulative delta is starting to indicate weakness in the move up. As you can see here, the bullish CD bars are declining and getting weaker and weaker. This is exactly what we want to see as short sellers. Now we're starting to see the bears taking control of the market. So we will patiently wait for more data and possibly a move below the pivot at support for us to add to our position. I have adjusted my stop loss to break even in order to prevent myself from losing money if the trade goes against me. You see, trading is all about managing risk the right way. Price is getting rejected at the 60s. It's an area of support, recent support. NASDAQ is still weak though, because the delta remains negative with no signs of reversal until yet. Sellers are increasing again, and we are approaching prominent support, 40s. That pivot happens to be a psychological level and strong support during the last couple of days as it was acting as a demand zone. Guys, just a quick reminder that if you like my content and would like to continue seeing this free content, please like and subscribe. This will help support the channel. Here is where most people take profit, hence the statement 95% of traders lose money. Taking profits too soon is a sure recipe for disaster, unless you're scalping with a super high win rate. I know that it is kind of counterintuitive, but as a trader who seeks to become successful in the market, you must go for home runs rather than base hits. Price is at the key level now. I will be waiting for the price to break through this level and close below it. There she goes. Let's wait for the retest now of the previous support turned resistance or a retracement aka pullback at a lower level in order to add another contract so that we will maximize those gains. Order placed now at this retest candle. So now my average price is $13,059, and my stop loss has been adjusted to slightly below break-even for a small profit if the price moves against me. We'll be waiting for the price to hit either my profit target, my stop loss, or an indication that the price may reverse in order to exit the trade. So the price hit my order, and that's about it. $2,100 profit from a $200 risk. 110 risk reward.